All right, good afternoon, everybody. How are we doing today? Hope everybody's having a good day and good week. We've had some crazy volatility in the markets the last couple of weeks, as I'm sure you're very aware. If I can just get a quick audio and video check, let me know that we're coming through loud and clear here. You can hear me speaking and you can see my screen as well. I would appreciate that if you can just type there in the questions box. Rick, Jonathan, thank you very much. I appreciate that. Let's go ahead and jump right in here because I want to show you all something real quick. Let's get our disclosures knocked out. Trading futures, options, or any financial instrument involves risk. May not be suitable for every investor. Any examples used here are not recommendations. Guys, if anytime we're on a webinar, if you see me hop on the Nadex demo platform here and I enter an order or submit a ticket, it's not in any way advice or a recommendation. It's me just simply showing you how to use the Nadex platform, or just helping you visualize what it is that I'm trying to teach you that day. Okay. Also, past performance not indicative of future results, as always. Okay. Real quick here, I want to take just a second out, and then we'll kind of keep rolling here. I want to pop you right over here, first thing, to the Nadex demo platform. Okay. And it's 1 o'clock Eastern right now. Some spreads just opened up here, and I want you to see a couple things here, just because I saw a couple examples right now. And so I want you to see these real quick here. First of all, let's look at these right here. And I want to show you this because it's going to kind of tie into something I want to show you here a little bit later. Okay. Let's see here. Right now, where is, okay, this spread right here. You see this spread? Okay. Where can I buy this spread at right now? Who can tell me? How much can I buy this spread for? 25,393, right? Everybody see that? Yes? Very important here. Like, you really need to, I know I'm jumping right in and you're like, what are you doing, John? Okay. I don't normally start my webinars this way. I go through big introductions, but I need you to see something live right now so you understand it when I teach you two strategies later. Okay. I can buy this spread for 25,392. Yes? Where is the market at? 25,405. So I'm able to buy this spread for less than where the market is right now. Does that make sense? Can everybody see that? Let me show you on a chart. What is this price? 25,393. Okay. Here's Wall Street 30, YM, right? 25,393. I can buy the spread down here, and the market is up here. Okay. So for those of you familiar with the basics of spreads, what do we know at expiration, or it's $1 a tick from where I get in to where I get out, right? Where it's priced at, okay? So does everybody see that live example? I can buy the spread for less than where the market's even at right now. Yeah? Okay. Another example. Where can I sell this spread at? I can sell it at 25,494. Yeah? Where's the market at? 25,401. Everybody see that? Okay. What about, I'm sorry, let's look at this one. What about this one? 25,446. See that? And the market's at 392. So I'm selling above the market. Make sense? So does everybody see literally how that is possible? Yes? And notice these two spreads that I showed you. This one has a floor of 25,425. This one has a ceiling of 25,425. Everybody see that? Where this ceiling is the same as this floor. And this one I can buy at 386 and the market's at 389. I can buy it below the market. Here I can sell above the market. This one has a top of 425. This one has a bottom of 425. Everybody see that? You may have no idea what I'm trying to get at, but I want you to visually see that, like right now. Everybody got that? Okay? Cool. Let's look at another example of something a little bit different. Let's go to forex. Go to euro dollar. Okay. Notice these two spreads here. See the ceiling? It's 1470, and it goes down 100 ticks, 100 pips. Yeah? See, this one is 1470, goes up 100 pips. Yes? This one up here, if I wanted to buy it, okay? If I want to buy it, what is my max risk? About 10, 11, 12 bucks, right? You've seen it kind of fluctuate there, right? 8 bucks at the current price, 8 bucks. See it? That's my risk if I want to buy it. Okay? My max potential reward, 92 bucks. Everybody see that? This is different from what I was trying to show you on the other one, okay? So, you see that? Where is this spread? The bottom is 1470, top is 1570. Okay? I'm able to buy right now at 1478. So I'm able to buy 8 pips above the floor. So that's why my risk is only 8 bucks. Okay? Notice that floor, the bottom of the spread. See here? Bottom is 1470, the top is 1570. Everybody see that? Now go down here. Look at this spread. Same number. You see that? The top is 1470, going down 100 pips. If I wanted to sell this spread, okay, what's my max risk right now? 9 bucks. And I could potentially make 91 bucks. Everybody see that? Okay? So, let's draw that on a chart real quick here. Because I'm jumping ahead because I see perfect examples to show you live of what I want to teach you today. So I wanted to skip through some of our introductions and get good live examples to show you, to help you visualize. Everybody good with that? Sorry, this is a little bit different start of a webinar, but I wanted to help you. It's more important for me to let you live visualize something than to give you a nice, pretty intro. Everybody agree? Everybody good with that? Okay. So 1470 is right here. So you see that we have one spread that's the bottom is 1470 going up to 1570. Right? Then we have this other spread. See it right here? 1470 going up to 1570. Yes? Now we have another spread that goes from 1470 down to 1370. Okay? Let's look at that one. So it goes from right here down to 1370. Does that make sense visually on the chart? We've got one spread that has a bottom of 1370 going, or 1470 going up, another spread that has a top of 1470 going down. Right? And when we looked at both of those, exactly, Jonathan, yep. And then this one right here in the middle, 1420 to 1520, okay? It's right in the middle, okay? 1520 down to 1420. So all three of these particular ones are 100 pips wide. It's just basically from here up 100, from here down 100, and then this one's 100. It's split in the middle, 50 up, 50 down, okay? And what did we see here when we looked? I could buy that top one and risk, what? About $8, right? See it? I could sell this bottom one, risk about $8, right? So this one, $8 risk, this one, $8 risk, right? Okay. On that one, and about an $8 risk on this one. Like you see that live on the platform, right? Okay. So everybody see that. You understand my drawing here on the chart compared to what you see on the platform and what that means. When you're looking at this on the platform, your spreads that are available, what does that mean on a chart? Okay. All right, so I just wanted to catch it real quick. We're going to come back to this. You're going to see why I did all this and why this is important for you to understand, okay? Because what we want to talk a little bit about today is we want to talk about how to trade news events, okay? And, you know, there's a ton of different ways that you could trade news. There's a ton of different strategies or systems, okay? And by the way, for those of you that are new, my name is John Skelton. I'm with apexinvesting.com. And, you know, this webinar today is brought to us and hosted by Nadex, so we appreciate them having us on. And, you know, I got to give Nadex a lot of props, as always. They have a lot of great and free education that they offer their members, a lot of great tools they offer their members. Definitely take advantage of them. But over at Apex, we're an online education company. We have, you know, over 25,000 members right now. We focus on risk management, probability. We've got indicators and trade rooms and strategies and systems, but we're traders just like you, okay? And we trade Nadex binaries and spreads almost every single day. I've been with Apex now for about 5 years. I've got a background in banking and as a stockbroker. I'm a trader just like you. I trade Nadex binaries and spreads all the time. Over on my live account, I've got a trade going right now on a couple of Nadex spreads, and we trade them all the time. And so we're here to kind of teach you and help you understand a little bit who is Nadex, what is Nadex, how do the products work, what are some different ways that you could take advantage of them, okay? And so that's what we want to talk a little bit about today. So if you're brand new to Nadex, make sure to hop on over to nadex.com. You can get some great information up in these tabs here. You can, you know, go on over to the Learning Center. This webinar today, we're going to jump right in. This webinar is going to assume that you understand the basics of Nadex spreads. Okay, I'm not going to really spend any time at all covering the basics. So if anything in this webinar is over your head or too fast for you, a couple things. For one, this webinar is being recorded. You can go back and watch it again if you would like. Okay. If you go right here to webinars, and you know, right here under, you could hit upcoming webinars, and you'll be able to see what webinars are happening in the future, and you get signed up for those. But if you hit on demand, and then you just find me right here, John Skelton with Apex. This is where all the recordings are placed, okay? This is where today's recording will be. Also, if any of this is over your head, you can go back here and there is a wealth of information here, a ton of recordings, you know, like right here, Binaries 101, or if you go to page 2, you know, you can go down here and find the basics of spreads. Do you understand risk and reward with spreads? So this webinar is going to presume that you understand those things. If you don't and you need to go back and catch up, you can do that, okay? And you can do that right there in that section. You can go back in and watch those basic webinars, watch some of the, you know, top mistakes webinars, and so on. Okay, so if you need to catch up, that's where you can go. If you want to rewatch this particular video, that is where you would go. Okay, is right there. So what we want to talk about today is how to trade news. Okay. And we want to talk a little bit about how to be aware of upcoming news, how to plan ahead for it, how you can do a little back testing, and a couple of different ways that you can utilize the Nadex products for news trades. All right, now I'm not going to sit here and go through every detail and every different potential trade. I'm just going to show you 2 basic ways. But something that's very important, okay? A couple misconceptions. Some people think, oh, there's a news event that's about to come out, so the market's just going to go up 500 points. So I'm just going to buy, or it's going to go down, I'm going to sell. And every news event is going to move the market. Well, you got to understand that's not always the case, right? Some news has very little impact on the market, okay, or none at all. Other news reports have huge impacts on the market and can move the markets like crazy, okay? So, you know, depending on the outcome of that news event, you know, sometimes there are news events that happen out of nowhere, right? Certain natural disasters or terrorism or world, you know, something crazy that, oh my God, urgent, you know, news, this just happened, and it can move the markets. You know, a lot of times it's kind of known ahead of time, hey, there's a announcement or there's a news event at this particular day and time. You know, and a lot of times, you know, there's certain news events that you know are going to happen, you know, like the weekly oil inventory report on Wednesdays or the weekly natural gas report on Thursdays or whatever it might be. Now, you don't always know if those reports, for example, the oil report, is it going to be over expectations or under expectations, right? Well, if it's under expectations and there's not as much inventory as expected, well then what's most likely going to happen? You know, like supply and demand, right? Lower inventories might, you know, normally mean higher prices. Much higher inventory, hey, there's a lot of extra oil than we thought, well, prices can go down and back and forth, right? So that can affect the market, you know, or if expectations are right where they were expected to be, or if the, you know, report was right where it was expected to be, then there might not be much of a effect on the market because, hey, that's what was expected, right? You don't normally react to something when it's what you expected to happen anyway. You're already prepared for it, right? You have to react and change when something was different than what was expected, okay? And certain news events can affect stock markets, but not affect commodities, or might affect commodities, but not affect, you know, indices. Certain reports can affect forex more, you know, the interest rates and so on. Big impact news. So you have to understand what report affects what markets, first of all, okay? Big impact news can create directional opportunities, meaning news events that have a big impact on the market and cause it to fly one way or the other based on that release or based on that report number or interest rate number or whatever. But the hardest part about trading news, and any of you that have tried to trade it know this already, is it's very hard to determine the direction ahead of time, right? It's very hard to do that. And you'll also probably fully be aware that most of the time, the people that try to predict it, even on the news, right, watching certain news channels and, you know, all that, they seem to be wrong a lot, right? you don't always know what these reports are going to be or what they're going to bring ahead of time. And, you might have seen that you try to go in and, guess it ahead of time and pick a direction ahead of time, and you're wrong, right? And then there's, again, small impact news that doesn't affect the market at all, or sometimes it can cause the market to just be range bound, meaning like sometimes there's news reports that come out at the same time, and one kind of has a negative effect on a certain thing, but a positive effect on another thing, and it just kind of causes the markets to stall out and to go flat. You know what I mean? Or where it's like, one piece affects another piece, or, you'll see like the people are hanging back, and not pushing the market. And it can cause the market to actually be range bound and stick within a range, just kind of go flat. Okay. So there's different ways to trade both of these. Okay. How are some ways to be aware of news? Well, you can go to just about any big news site out there. All right. And, find schedules, information about these big upcoming news reports. Okay. Just to give you, a couple of ideas of some different ones I use. I mean, you can go and you can look at all the major big boys. You can just go to Google and type in, news releases, trading news. One that I use a lot, just as an example, is forexfactory.com. Now, this is not every single news event that's out there. This is also predominantly news events that are going to affect Forex, obviously. But it's really neat because you can go through and you can check all the different, days and like yesterday. I mean, you would have seen this all the way from early morning European session all throughout the day of, what's happening? What are the different little news reports coming out or financial reports coming out? What currency is it most likely to affect, right? The pound, the euro, the CAD, the dollar. Also, like in red here, you'll see, hey, not just because there's a news report doesn't mean it's going to do anything. But the ones in red have a history of being higher impact releases. Okay? If you're trading, okay, so kind of a twofold webinar here. For one, how to trade news, potentially trade news events. But also, even if you don't want to trade either one of these strategies I'm going to show you real quick, even if you don't want to actively look for news to trade it, you need to be aware of it, don't you? You might say, nah, I've got my own little strategy and system. I don't want to dig into news trading. It can be, whatever. Well, it's still a good idea that it's coming, right? I mean, if it's last night, Wednesday, and you're trading the Aussie dollar on some, little strategy or system that you're using, and let's say that that's going really good, that trade's going really good for you, and then boom, out of nowhere, like let's say you get in this trade at 8 o'clock last night, hey, the trade's going really good for me, I like it. Boom, 8:30, all of a sudden your trade whips the other way out of nowhere. And you're wondering, what the heck happened? My strategy's terrible, my system's terrible, I gotta get rid of these charts and indicators and find something new. Well, doesn't not, and maybe you do, but that doesn't mean that's the reason. If you're in a trade on like the Aussie dollar, for example, don't you think you really want to know, hey, at 8:30, they've got employment change and employment rate and quarterly, there's some big stuff coming out, right? On the Aussie, I need to be aware of that. So I either know how to trade that event, or I know I don't want to trade Aussie during that time, or I know if I'm already in an Aussie trade and it's going, my direction, I'm up in profit, I might want to tighten that stop, protect some of those profits before that news event. So whether you actively want to trade the news event or not, you need to be aware of them. Does that make sense? Can you see that? Or can you see why that would be important to know that news is coming? Whether you're going to actively trade it or not, it's pretty important to know that that's coming. Okay. Look at, all right, or today even here, the point is it goes through and it shows you everything that's coming out. All right. It lets you know which one are the high impacts. You can go back here and see some detail about it. You can look at past results. You can see, hey, what is the forecast? Okay. Like, well, the forecast, was -4%. Well, it actually came out -8, -0.8. Okay, well, you can see, you can see ahead of time, what is the forecast? And then as the events come out, what is the actual? And obviously that's what's going to make the big differences in these things is how often the forecast were they? Okay, so it's really good to know those things. There's a ton of other websites you can, go to be aware of different news. Another one that I kind of use that I have up most of the time throughout the day, it's a site called Financial Juice. And this thing will update, look at the times, 12:21, 21, 12:18, 18, 18, 18, 18, 18. This is just, kind of keeps me up to date on what's going on or anything new changing and, talking, information here about the Aussie dollar or, what's going on overseas or, hey, dollar CAD nears its highest levels of October. Okay, you can click on that and read about it. It kind of helps keep you up to date on what's going on out there. All right, what is the Fed doing? What's going on with interest rates or bonds or, some gold technical analysis or, hey, US dollar falls to new daily low. Okay, hey, I didn't have a dollar yen chart up, so the dollar yen right now is at a daily low. Let me look at that. I think it's going to keep falling. Is it going to turn around at its daily low? Let me take a look at. Do you see how some of this is? You don't want to get overwhelmed in like what they call analysis paralysis or information overload. But can you see how it's probably a smart thing to be aware of some of this that can really move the market or really, be aware of I'm in a trade or looking for a trade right about the time this big news thing is going to come out. Can you see that? Okay, so that's a very important thing to know, okay, and to be aware of, okay? So that is just a couple of ideas of some places you can go to get some good information about news. So we talked about it's hard to know the direction ahead of time. Expectations are normally wrong. But it's also some people say, well, I'm just going to wait for the news to come out and see the market react to it, then I'll get in. How many of you have ever tried that? And seen when that news event comes out and that market took off 100, 200 pips, and by the time you got in, it had already made most of the move, and it's coming back the other way, right? It's hard to enter directionally because it's so fast. And the pricing of the premiums, might be higher, waiting till afterwards. So it's a little hard to trade it sometimes after, okay? So how can you trade it? Well, we're going to kind of fly through this real quick here. I want to show you two different potential ways you could trade news, all right? If you want more information about these two strategies after this webinar, again, I've showed you where the recording will be. You can watch it again. Otherwise, you're welcome to hop on over and visit us at apexinvesting.com. We've got, some videos and education over there, and you can watch some more videos on these two strategies. So let's talk about the two different types of news events. Let's talk about the big ones, okay, like the larger moves, news events that have a history of moving the market a good amount, okay? And we're going to talk both of these strategies. We're going to talk about how to utilize Nadex spreads to trade them, okay? So one is called a straddle, okay? When you think of a straddle, You think of like, remember when we were a kid, you're playing on the fence, you're straddling the fence, right? You're sitting on the top of a fence, got a leg on both sides of the fence, right? Or like a cowboy riding a horse. He's sitting on the horse, a leg on each side, sitting in the saddle, a leg on each side. He's straddling the horse, right? So a news event's about to come out. Historically, it's a big news event. Historically, it moves the market a lot, but we don't know which way it's going to go. So we want to go both directions. Okay? Now, at first, you're like, well, wait a minute. We want to go both directions because we don't know which way it's going to go. No, we don't know which way it's going to go, but we expect it to go one way and go pretty far one way, right? Because it has a history of a big move. So if you see on my screen here, it says buy the upper spread close to the floor, sell the lower spread close to the ceiling. The market must move enough to cover premium and loss on the other side. What does all that mean? You already know because I showed you. Oh man, I just actually deleted that chart. Did you see that? I clicked the wrong button. Let me open it back up here. Because this is exactly what I was showing you earlier. Remember? I totally clicked the wrong button though. This is what I was showing you a little while ago. Okay? So let me pull it back up and mark it on the chart. Because I want to be able to show it to you live. Okay? But this is what I had on that chart. Okay? And do you remember what we had drawn on there? So remember I had showed you on the platform. We had 1470 to 1570, right? Okay. And give me a second. I'm sorry, guys. I totally clicked the wrong button and deleted it. Not what we wanted. Okay. So I want to draw it back in here for you. So we had 1470 to 1570, right? And then we had 1470 down to 1370. Remember? Everybody remember that? And at the time I was showing you, what were we looking at? What did we have? Okay. We had up here risk $8, max reward 92, right? Remember that? And what do we have down here? Same thing, right? We had risk $8 and again, well, max reward 92. Okay? So imagine the market's right here. Okay? You can see where the market is right now. Right there. And there's a big news event coming out. It has a history of moving the market a lot, right? Okay, let's say, oh, it can move the market 100 pips, no problem. Okay, but we don't know what direction, do we? Right, Jonathan, you agree? Rick, Katrina, everybody, you agree? You understand? Like, there's a big news event coming out. It has a history of moving the market like 100 pips, but we don't know which way it's going to go. And we don't want to wait till it comes out because then we might miss it all. So this is an example of something we could do called a straddle, where we're straddling the market. We want to buy and sell, right? Because we don't know which way it wants to go, but we're expecting it to go either 100 up or 100 down. Okay? So if I had bought this one, okay, let's say the market went up, and it went up 100 pips. So it went up here past my ceiling, okay? How much would I have made on this spread? Well, I bought it. I risked 8. The most I can make is 92. So even though it went up 100 or 150 or 200, whatever, the most I can make on this spread was $92, right? So let's say that happened. News event came out, market shoots up, I make $92. Is that my profit on the trade? $92. Well, it's my profit on this spread of $92. But I'd also sold this spread. What was my risk down here? $8, right? Because I sold this one. So yes, I made 92 on this one that I bought, but I lost 8 over here. So my real profit is then what? 92 that I made here minus the 8 I lose over here, so I'm up $84 on the trade. Does that make sense? So I'm risking $8 on this side, I'm risking $8 on this side. I've got 100, you know, I can potentially profit 92 if it goes up all the way, or I could potentially profit 92 if it goes down all the way. Yes, I'm going to lose the other side. Like, does that make sense? I'm going into this trade fully expecting to lose on at least one side. Like, you get that, right? And you're kind of okay with that. You're okay with losing $8 on this side if you can get the max 92 on this one, right? Does that make sense? So does everybody understand this strategy? It's a big expected move coming out. I expect it to be a big move. I just don't know which way it's going to go. So I want to be in the market both ways with room to profit a good amount either way, but with a low risk. Any questions on that part right there? Does everybody understand that? Make sense? Okay. Carlos, you're spending 16 to get 92 in your example, right? So your net profit would be 76. Well, Carlos, over here, okay, you have to realize these are two separate entries, okay? Two separate entries, right? On this one that I'm buying, okay, I'm risking 8, and the max I can make is 92. Okay. So, and why is that? Why was I technically risking 8? Well, because where I was having to buy was 8 pips above the floor. Does that make sense? Okay, because my risk is from where I buy to the floor. Okay, but on this one, Carlos, if it goes all the way up, then I don't lose that $8, right? I get that $8 back plus the 92 that I made. So I don't have an $8 loss on this side, only on the sell side. Does that make sense, Carlos? Is it okay? You follow me there? Okay. But yes, Carlos, you're right. As soon as I place this trade, what is my overall total risk on the trade? Well, $16, because I'm risking 8 on both sides. What happens if that news event comes out and for some weird reason doesn't move the market at all? And the market goes flat and it stays right here in the middle the whole time until my trade expires. Well, then I would lose 8 on both sides, wouldn't I? Right? Okay? Worst case scenario in this trade is that it stays flat, and I lose $8 on both sides. Okay? Or it could only go halfway up. So I'm up at 50. So I made like $42 on this side and lost 8 over here, right? I may not always get to max profit. I could end up somewhere in the middle, right? So the biggest thing that I want to make sure of with this trade, okay, is what is my overall risk? $16, right? Do I want to do this trade on a news event that historically only moves the market 15 or 20 pips? Is that really a good risk-reward ratio in that sense of, well, historically it only moves at 15 or 20 pips, sometimes only 10. That's probably not worth doing this trade, is it? Sometimes it'll move the market 15 or 20, most times just 10. Well, that's probably not worth it, the time to even set this trade up. But if historically, it moves the market 50 to 100 pips. Okay, cool. So if I can get in this trade, with at least less than a $50 risk, I mean, maybe on a big news event, I can't quite get this low risk. Maybe it's $15 on each side, but it's normally a 50 pip move. Then okay. Does that make sense? Like, you can't throw this trade out there every time there's a news event. You only want to use this trade when it's a high impact, bigger news event, that has a history of moving the market a little bit more. Okay. Jonathan, you can go back and you can click on these. Okay. And you can see the history right here. See it? Okay. Of all the previous events, of the actuals and the forecasts, and you can go back and, look at how being under, and then compare that to charts, okay? And you can look at it to say, okay, when the actual was greater than the forecast or the actual was less than the forecast, what does it do to the market? Okay, but you can go back and check out these dates of, okay, when were the last times that this particular news event was released? Okay, and then you can look on a chart and say, oh, wow, it went, it average moves this much. You can also say, okay, another thing you can do is you can look at some of these news events and say, okay, it normally moves the market 100 pips. But does it take, like some news events move the market 100 pips in like a minute? You know what I mean, Carlos? Or sometimes it might take an hour. You know what I mean? You can kind of see how long it takes as well on some of these news events. All right. Because then you might know, do I want to spread this 1 hour long, 2 hours long, and so on. Okay. Let's see here. Joe, is there a resource to take the average move for the major event? Yeah, there's, let's see here. I believe on this site as well. Hold on, let me look. History. Connection rate. There is a site, I can't remember the name of it off the top of my head, Joe, that will kind of see that. Joe's asking, is there a resource that tells you the average move? I know there's a couple websites that do. I can't remember off the top of my head. I'd have to look at that. I don't personally use them, Joe, because I always like to go back and look myself, because the resource might tell you, hey, it moves the market 100 pips. But is that in 1 minute? Or is that over the whole day? Like the news report came out at 10 a.m. and through that whole day, the euro dollar went down 100 pips until midnight. See, I need to know the time because my spreads or my binaries have an expiration, right? And I want to be able to see that. And I want to be able to know, you know, how long of time I need, okay? Another good reason I like to go back manually and look at it myself, Joe, because what you'll also see when you go back and look at some of these news events is that certain news events have a history of, hey, the event just came out, it shot way up, okay? And you'll find this in a lot of news events. It shoots way up, then within 30 minutes does a 50% retrace correction, then it starts to trend up in the direction of the original push. You ever seen that on a news event? A burst out, and then a pullback, and then a trend back in that direction. Some don't do that, though. Why is it important to know that? Well, it's important to know for a couple reasons. Of it burst up. Do I just want to, boom, get out? Or it burst up, it's going to pull back, and do I want to stay in it while it's trending? Well, how much time do I have left till expiration in this spread? If the best spread I could find for the best risk and reward is only 30 minutes left expiration, maybe I want to get out on the burst as opposed to the pullback and then I expire and didn't make much. Does that all make sense? Why I want to see a little bit more than just a number of how much it moves. Okay? So yeah, there's a little bit of work and research that goes into if you want to trade these news events. But what's nice to know is on certain, like this here, Sunday night, especially if you're a part-time trader, or if you only trade at night, you know, some of you have full-time jobs and only trade at night. Well, we've talked about this before where, you know, sometimes you sit down to trade at night and there's nothing going on. You feel like you just wasted a whole evening away from your family and your life, and you're like, ah. But if you can go through like on a Sunday or Sunday night, and look at the schedule for the week of what days or nights are having good, you know, decent news releases, you could plan your trading around that. Of, hey, I only want to trade 2-3 nights this week because I'm a part-time trader. Well, do you want to trade on a flat night where there's absolutely nothing going on? Or do you maybe want to plan ahead for the week going, okay, these are the certain nights I want to trade because that particular night, you know, there's something that's coming out on the, you know, Aussie or the dollar or the, you know, whatever it might be, right? I don't know how we got back to September here, but you know, you can use it to plan ahead of when you might want to trade, okay? All right, guys, we are running out of time, so I'm going to skip forward here. So everybody understands that. That's the first strategy called straddles, okay? We only use the straddle when there's big news events, meaning big expected moves. What about, and most news events are not going to move enough to make the straddles worth it. Okay, it's got to be the high impact, bigger ones. A lot of them are just going to move the market a little bit, and then they'll come back. Okay, you know, the ones that are not high impact might cause a blurb in the market, and then it kind of comes back and plays back in that range. All right. So we want to talk about the low impact range news events where we're looking to collect premium. What does that mean? Okay, I'm going to kind of skip ahead here because I've already showed you some of this. It's called an iron condor. Okay, a lot of people get this trade wrong. It's the exact opposite of the straddle. The exact opposite. Remember on the straddle, we were buying the upper spread. When I say upper spread, I meant this one up here. Remember, we were buying this one before, okay? But actually we want to sell that one. And we were selling the lower, we want to buy it. It's the opposite of a straddle, okay? Do you remember the very beginning of this webinar? What's the first thing I went and showed you? I showed you an example where you could buy below the market. I showed you, right? You can buy this particular spread and it was below the market. Remember that? And then I showed you another one where you could sell a spread above the market, right? So what would that look like? Well, you know, it would look completely different from this, okay? It would be that you'd be able to sell a spread up here, right? And you would be able to buy a spread down here, okay? And let's say the market expired right here where it is. How does it work on spreads? If I buy a spread here and the market expires here, what do I make in profit? I make the difference of where I buy compared to where I get out, $1 a tick. Yes? Those of you that understand spreads know that, right? That's how a spread works, right? If I bought it here and I got out of it here, however many pips that is, that's $1 a pip. Yeah? Same with the sell. If I sell a spread up here and it expires or I get out down here, what I get is $1 a pip difference. So if I can buy a spread down here and at the same time sell a spread up here, what I'm creating a box. And what I'm looking for is for it to expire, the market expire within this box so that I get the difference. Okay, let's look at it. So, quick example. Let's say there's a spread that has a bottom or a floor of 600 and a top of 700. Okay? So 600 floor, 700 ceiling. Right now the market's at 700. So the market's at the top of the box. But I can buy it for 680. Just like the examples I showed you earlier. Right? So if I buy it for 680 and the market stays right where it is and expires at 700, what is my potential profit there? 20 bucks, right? That's pretty simple. Yeah? Okay. What happens if, same scenario, I buy it at 680, the market goes up to 720. What's my potential profit? Still the same 20 because I don't make money above this number right here. Okay? 600 to 700, market's at 700, I buy it at 680. Market comes down to 690 and then expires. What did I profit? Bought it at 680, it expired at 690, made $10. Right? Okay. One more example. Same setup. I buy at 680. The market's at 700. The market shoots down to 660 and then expires. So I bought at 680. It ends up expiring 20 pips below that. So I lost 20. Right? Because the way a spread works is $1 a pip from where you get in to where you get out. I got in at 680. I got out at 660, so I'm down 20 bucks. okay? So the most I could have made was 20. And in that example, it get down to 660, I lost 20. But what did it take for me to lose 20? Did it take a 20 pip move or a 40-point move for me to lose 20? Ah, right. It actually had to move against me 40 pips for me to lose 20 pips because I bought lower than where the market is. Understand? Okay. Let's look at a different example. Remember where this spread was? 600 to 700, right? Now we got another spread that's 700 to 800. So the floor and the ceiling are the same, right? Let's say the market's at the same place. We're looking at the same market. The market's at 700, but there's another spread that's 700 to 800. That one I can sell for 720. You remember when I showed you this example at the beginning of the webinar on the platform? There's one I could buy below. There's one I could sell above. So 700, 800, the market's at 700. I can sell it for 720. The market stays right where it is and expires at 700. How much do I make? I sold it at 720. It expired at 700. I made 20 bucks. Okay? Same example here. The market moves up 20 ticks and expires at 720, right where I sold it. Did I profit? Did I lose? Or am I break even? Break even, right? If it goes up to 740 and I get out. Well, I sold at 720. When it got to 740, I'm down 20 bucks. Everybody understand this so far on the two sides, the buy and the sell side? Let's put it together. Look at this, okay? So what we have right here, we have this spread. The top is 700 going down. We have this spread. The bottom is 700 going up. Get that? So there's a news event coming out, and I expect the market to just move a little and then just even out flat. So the market's right here at 700. I can sell this spread at 720. I could buy this spread at 680. I can potentially make 20 on both sides if the market stays flat. You see that? And I collect that premium on both sides, as it were. Does that make sense? So my best case scenario, what I want is the market to stay as flat as possible. What happens if I did this? I sold and I bought, right? Pay close attention here. The market actually goes up to 720 and expires. Okay. Well, I sold this one at 720. It comes up and expires at 720. Where did I end up there on this spread? Made money, lost money, or break even? Sold at 720, but it came up to 720 expired. So I broke even on it. But what did I make down here? I made 20 bucks. So I'm up 20 bucks in this overall trade. Make sense? Yeah? What if the market came up to 720 and then it came up to 740 and expired there? How much did I lose on this trade right here? The sold side. I lost $20, right? Because it went 20 against me. But I still made 20 over here. So I'm break even. The market going against me 40 pips. I'm still break even, right? What's the most I could make on this trade? If it expired right in the middle and I made 20 on each side, 40 bucks. So let's just say, Katrina, I wanted to do a 1-to-1 risk-reward ratio, right? I'll risk a total of 40 to make a potential of 40, right? If 40 is the most I can make, then 40 might be the most I want to risk. So when I enter this trade, the market's at 700, right? Let's say that the market goes all the way against me to 780. It goes 80 pips the wrong way. Like I want it to stay flat. It goes 80 pips. Like that's a big move, right? How much am I down on this sold side? I sold at 720, but it came up here and expired at 780. How much am I down on this side of the trade? 720 to 780, I'm down 60 bucks, right? But what did I make down here on this one? I made 20. So overall on the whole trade, I'm only down how much total, Jonathan? 40 bucks. And what was the most I could have potentially made if I was right and it stayed right in the middle? 40 bucks. So do you see where I'm going with that? So look at it this way. The same thing if I was wrong and it came all the way down here to 620. That'd be the same math, wouldn't it? Right? Because I bought at 680. It came down to 620, so I'm down 60 bucks. But I made 20 on this side because it went down, so I'm only down 40 bucks. So I can make 40 bucks on this trade max, or I can lose 40 bucks max if I get out. Does that make sense? But what did I just create for myself? A 1-to-1 risk-reward ratio from 780 down to 620. I just made a 160 pip box on the chart that gives me a 1-to-1 risk-reward ratio. That is crazy. That kind of blows your mind for a second if you're like, oh, wow. Right. Does everybody see that? Because the market can go like against you 80 this way or against you 80 this way, and as long as you get out, you're still creating a 1-to-1 risk-reward ratio. 160 pip box that you kind of make for yourself to operate in with a 1-to-1 risk-reward ratio, and your max risk still being 40 bucks. Okay? So do you see the two differences there? What you want is for the market to stay in this range. That's where you make the most. Okay, is when it expires inside the range. You can make money on both sides. All right, so one of these trades, this one here called the Iron Condor, you're looking for low impact news for a range-bound market. The straddle is when you're straddling both sides, wanting a big move of the market. Does that make sense? Guys, I know I hit you with a lot of information today, and we came out of the gate running. I hope this kind of sets it up for you, opens your eyes a little bit to these two potential ways that you could trade news events using Nadex spreads. In addition to that, I hope it, also opens your eyes to, hey, even if I don't want to do either one of these trades, I definitely need to always be aware of news coming out because how it can affect the markets. Okay. Ernest says the Iron Condor tutorial just made my day. Ernest, it's a lot to take in, and sometimes people have to go back and watch this and watch it again and play with it. It's a great thing to test in your Nadex demo account while you're learning it. But what you have to realize is once you get it down, it creates this huge box for you, man, you know, of a 1-to-1 risk-reward ratio. I mean, how else can you trade 160 pip range of a market for a $40 risk max? You know what I mean? And it's definitely something to look at during these, you know, lower IV times or lower news impact and play with them, okay? Guys, I have to run. We are way over. Once again, if you go to nadex.com, let me show you one more time where you can get some recordings and more webinars. Let's see here. Hop over to nadex.com and you can go to the Learning Center here. Let me get this back up. Yep, here we go. So if you go right here to Learning Center, go to Webinars, hit On Demand, and then find me right here, John Skelton, okay? And you can go through and watch a bunch of other webinars that I've done, everything from the basics of what is a spread, how do they work, some different strategies, what's better, binaries or spreads, scalping, trading, a ton of stuff in here, okay? Otherwise, feel free to hop on over and visit us at apexinvesting.com, and you can create an account over there and watch some more videos there about either one of these strategies, or hit us up, let us know if you have any questions. So, okay, guys, also make sure to hop on here to webinars upcoming and get scheduled and signed up for any of these upcoming webinars. You'll also get reminder emails once you're registered. I appreciate you joining us today and hope you have a great trading day, trading week, weekend, and we'll see you on the next one. Thank you so much, guys. Have a good day. All right, bye-bye.